Hello everyone. In today's video, we will learn how to make an income and expenditure account with more additional information. So let me show you the sum. This is our sum. From the following information and receipts and payments account of Prince Club, prepare an income and expenditure account for the year ending 31st December 2014. They have given us the income and receipts and payments account. So with the help of the receipts and payments account and the additional information, we have to prepare the income and expenditure account for the year ending 31st December 2014. So let us check the receive side and the payment side of the receipts and payments account. The receive side starts with the opening balance. The opening balance of cash during the year was 3,190. Then the entrance fees amount received in cash is 550. Subscription received in cash is 18,000. Donation received in cash is 1,650. Then life membership fees received in cash is 2,500. Then interest received on deposit is 240 in cash. Then proceeds of tournament, that means by conducting tournament, the income received in cash was 2,320. On the payment side, we have rent paid in cash during the year is 1,680. Wages paid in cash during the year is 2,450. Lighting charges paid in cash during the year is 720. Then books purchased during the year in cash is 2,480. Then office expenses paid in cash is 4,500. And money invested in fixed deposit during the year in cash is 12,000 rupees. And tournament expenses paid in cash during the year is 2,020. And the closing balance of cash is 2,600. Now the additional information which is provided to us is: Number 1, on 31st December 2013, 31st December 2013 is the year ending of the previous year. So the year ending of the previous year becomes whatever balances of asset which will be there at the ending of the previous year will be the opening balance in the current year. So the club possessed at the beginning was books worth rupees 20,000 as balance. So this is our opening balance of book in the current year. Then furniture opening balance during the current year will be 8,500, and we have to provide depreciation on these assets at the rate of 10% on the opening value. And it also, if there is any purchases during the year, then we have to provide depreciation for that also for these assets. So if we look on the payment side, we'll get the information of the assets if they are purchased during the year. So we can see books is there. So that means books were purchased during the year, and the amount is 2,480. So we have to provide depreciation on the purchases of books, and the date of purchase of books is not given. So we will assume that the books have been purchased at the beginning of the year. So we will provide depreciation for the whole year on 2,480. So the total depreciation on books would be on the opening value of books and the purchases of books which was made during the year at the rate of 10%. We also have to provide depreciation on furniture on the opening value. There is no purchases of furniture during the year and there is no sales. So we have to provide on that 8,500 at the rate of 10%. Then the second adjustment is related with subscription. It says subscription outstanding at the beginning. At the beginning means last year's outstanding was 350. If in the question is not clear about the previous year's outstanding, then we always assume that it is received in the current year. That means this 350 will be included in this 18,000 which belongs for the previous year. And it also says that at the end there is an outstanding of 550. At the end means the current year's outstanding. That means the members have not paid in the current year. The amount is 550. If they have not paid in the current year, that means this 550 is not present in this 18,000 rupees, but it belongs for the current year. We have to show this in our income and expenditure account because we have to show the total subscription even if it is not received. Next, the next adjustment is related with rent. So for rent, the actual amount of cash paid is 1680. The additional information says what? The club paid 3 months rent in advance, both at the beginning as well as at the end. So at the beginning means last year's, they are talking about the previous year. In the previous year, an advance of 3 months rent was paid. That means if no information is given about the advance, we always assume the advance is for the current year. If the advance was paid in the previous year for the current year, then that amount will not be included in this 1680 because it is already paid in the previous year. So this payment will not be made in the current year. So it will not be present in this, but we have to show this in this year because it is of the current year. Even if it is not shown in the cash, we have to add it and show it. Then again it says at the end also an advance was paid for 3 months. That means if it is paid in the current year, we will assume, if it is an advance, we will assume that it is for the next year. That means it is for 2015. So this amount which is paid in the current year for the next year will be there in this amount of 1680. But this amount is not of the current year, it is for the next year. So we should not show this amount. So we are going to subtract this. So this adjustment, we will do it in details when we will enter rent in our income and expenditure account. So before making the income and expenditure account, let us separate the items of revenue nature which will come into the which will go into the income and expenditure account. Let me start from the receive side. This will be related with income. We can start opening balance of cash will not come. So entrance fees, if no information is given, then this will be a revenue nature item. It will be taken in the income and expenditure account. Subscription is a revenue nature item. It will be taken. Donation, if no information is given, we treat it as a revenue nature item. Life membership fee is a capital nature item because it is paid once by the member only. Then interest on deposit is a revenue nature item. Then proceeds of tournament is a revenue nature item because tournaments are always conducted by clubs. So it is a recurring nature item and it will be treated as a revenue nature. On the payment side, we have rent is a revenue nature item, wages is a revenue nature item, lighting charges is a revenue nature item, books is a capital nature. In not-for-profit organization, books is treated as an asset. Then office expenses is a revenue nature item. Fixed deposit of 12,000 is a capital nature, but this 8% which is supposed to be received on the amount of investment as interest is a revenue nature. The interest to be received is a revenue nature, and we have taken that as a revenue nature. It is related with this interest on deposit. So the interest which is received in cash during the year is 240. So we have to check whether this 240 is the total interest or not by calculating the total interest on this investment of 12,000 rupees. So we will do this in details. So we should just remember fixed deposit is an investment. It is a capital nature, but the interest to be received on the investment is a revenue nature. Then comes tournament expense is a revenue nature item. So these are the items which will come in the income and expenditure account. But we should remember the adjustments that we have to make. So we can mark the accounts which requires adjustment. That is subscription, which will require adjustment. Interest on deposit, we have to check whether this 240 is the total interest or not. So it may have adjustment. Then we have rent which will have adjustment, and also we should not forget to provide depreciation on books and furniture. So we should provide depreciation on books and furniture on the opening as well as the purchases at the rate of 10%. So let us start with the income first. So we will start from the receive side. I will show the items which requires adjustment first, then we will take the other accounts which does not have adjustments. So starting from the receive side, the first item which requires adjustment is subscription. So when we take subscription in our income and expenditure account, towards our expenditure side, towards our income side, we will write by subscription as 18,000. Then from the additional information, the outstanding of the previous year, we will assume that it is received in the current year, so it will be included in this 18,000, but it is of the previous year, so we have to subtract it. And the outstanding of the current year, we will assume that it is not received. It is outstanding, so it is not received, so it will not be included in this 18,000, but we need to show it in the current year because it is of the current year. So in order to show the total subscription, we have to add this 550. After the adjustment, whatever amount will come will be the actual subscription for the current year. So when we show this in our account, it will appear like this. So when we make the account, we first of all write income and expenditure account of Prince Club in the next line for the year ending 31st December 2014. Then debit side we write as expenditure and credit side we write as income. Now on the income side, we can write by subscription. The amount received in cashes during the year is 18,000 rupees. And out of this 18,000 rupees, 350 has to be removed because it is of the previous year, which is actually received in the current year. So this was the outstanding at the beginning, means of the previous year. So we have received in the current year, which is included in this 18,000. We are subtracting it. Then we'll add the outstanding at the end, 550, which is not present in this 18,000, but it belongs for the current year, which we did not, which the club did not receive during the year. So it will be added because it belongs for the current year. After the adjustment, we will get a subscription of 18,200, which is the actual subscription for the year ending 31st December 2014. So you are clear. I hope you are clear with the subscription. Now let us see the next item which requires adjustment. The next item on the income side, the account which may require adjustment is interest on deposit. So let us check whether this 240 is the total interest or not. To know whether this is the total interest or not, because we have to show the total interest in our account, so we have to find the total interest. If there is any accrued or if there is any excess of interest, we have to adjust that also. So in order to know the actual interest on the deposits, we have to see how much is the deposit made is 12,000 rupees during the year. Then this deposit was made on 1st July 2014 and the rate of interest is 8%. So if this the deposit was made on 1st July 2014, so we have to check the interest from 1st of July 2014 to 31st of December 2014. That means it is for 6 months. So we will calculate this, we'll calculate the interest first. So when we calculate, this is what we will get. The total interest on fixed deposit from 1st of July to 31st of December, it is 6 months. So 12,000 rupees for 6 months at the rate of 8% will give us an interest of 480. That means if we see in our receipts and payments account, the interest received is 240 only. If we look on the receive side, the interest received is only 240 on fixed deposits. So our actual interest is 480, but received is only cash is 240. So the amount which is not received is 240, which is our accrued interest. So this we will show it in this way in the income and expenditure account. Subscription is already shown. Now when you show it on the debit side, we will write it as by interest on deposits, the amount which is shown in the receipts and payments account, 240. This is received in cash, and the interest which is not received in cash is 240. This is accrued, so we add the accrued because it is of the current year. Then our total interest is 480. So I hope you have understood the interest. Now the items which will be taken on the income side and it has no adjustments are entrance fees, we need to take it. Then subscription we have already taken. Donation we have to take it. Then we have to take interest on deposits we have taken. Then we have to take proceeds of tournament. So 3 items are left, so we have to take these 3 items towards the income side. So when we take this towards the income side, then this is how it will appear. Subscription is already entered, interest on deposit is already entered. Then we will enter buy entrance fees 550, then buy donations 1650, then buy proceeds of tournament 2320. So our income side is completed. Now we will see the expenditures from the payment side. We will take the items which requires adjustment first. Then we have rent. So rent, the amount is 1680. Now rent, the information given to us is the club paid 3 months rent in advance, both at the beginning and at the end of the year. So if the rent which is paid in advance for 3 months at the beginning means last year an advance was paid, the previous year an advance was paid for 3 months. Previous year means the year that they are talking about is of 2013. If any advance is paid in 2013, we will always assume that it is for the next year. The next year is 2014, which is the current year. So 3 months rent is paid in advance, and this rent is for 2014. That is our accounting year. Then they have also said that in the current year, that means at the end, that means our current year is 2014. Again, another 3 months advance is paid. This we assume it is for 2015. This is for the next year. So if we are preparing the receipts and payments account, on our payment side of the if we are making it for 2014, if we are making the receipts and payments account, on the payment side we will have rent. If the previous year's rent, in the previous year an advance was paid for 3 months, that is for 2014. That means this 3 months rent it will not be paid again in 2014, so it will not be shown on the payment side. Now on the payment side, if the rent is paid, the full rent is paid, it will be paid only for 9 months, because 3 months rent is already paid in the previous year. So in the current year, the rent that is left will be only for 9 months. Then in the current year again, an advance rent was paid for 3 months, that is for 2015. So it will be there in the receipts and payments account of 2014 for another 3 months, because this is the advance of the next year. So the total will be for 12 months rent. So here the amount which is shown in the question is 1680. This rent is for 12 months. 12 months means 9 months rent for the current year and 3 months rent for the next year. So the total months is 12. So 12 months rent is 1680. So we already have the rent for 12 months. We have to show the rent for 12 months only, but then we have to show the details. So when we have to show the details, so in the working note, we have to calculate the 3 months rent first. So how we will calculate the 3 months rent? This is how we will calculate. The total rent which was paid in cash is 1680. Then the rent for 1 month will be 1680, as I said that it is for 12 months, because 9 months rent is for the current year and 3 months rent is for the next year, which is an advance which is paid in the current year. So it is the total month is 12. So the cash is for 12 months, so we divide it by 12, so we will get 1 month's rent, which is 140. Then the 3 months rent will be 140 into 3 gives us 420. So we got the 3 months rent, which is an advance, right, for the beginning as well as at the end. That means in the previous year's advance and the current year's advance, which is paid for the next year's. So we have the information here as in 2013 an advance rent was paid, so it is for the year 2014. So 420 is for the next for the current year 2014, which was paid in 2013. So this amount will not be there in this 1680. So we have to add this, because this belongs for the current year and it it is not there in this amount of 1680. Then again an advance rent was paid in 2014. This is in the current year. It is paid, and this advance is for 2015. So this 420 is there in this cash of 1680, but it belongs for the next year 2015. So this will be subtracted. So when we show this in our account, we will show it in this way. On the expenditure side, we write to rent from the receipts and payments account, which is paid in cash, is 1680. Now the advance rent at the end means the advance rent which is paid in the current year for the next year, that means for the year 2015, is 420, which is there in this cash of 1680. So we are subtracting this. Then the advance which was paid in the beginning, that means in the year 2013 it was paid, but it belongs for 2014. This is not there in this cash of 1680, but we need to add it because it belongs for the current year, for the year ending 31st December 2014. So we have to add this because it is for the current year. So after doing the adjustment, our rent will be 1680. It will be the same amount because it is for 12 months only. So the amount will not change, but the details have to be shown in this way. Next, we have the next item for adjustment is depreciation. So depreciation we have to provide on books. The opening value of books is 20,000 rupees. There is no sale of books, so we have to provide for 12 months on 20,000 at the rate of 10% on the opening value of books, as well as on the books which were purchased in the current year, that is on 2,480. The date of purchase is not given. We assume that the books are purchased at the beginning of the year, so it will also be provided for 12 months for the entire year. Then we have furniture. Opening value is 8,500. There is no purchases of furniture, as well as there is no sale of furniture, so we have to provide the depreciation on 8,500 for the full year, that is for 12 months at the rate of 10%. So when we calculate the depreciation, this is how it will appear. We can calculate it in this way. The calculation of depreciation for books, opening value is 20,000. Purchases made during the year at the beginning is 2,480. So our total value of books is 22,480. So we have to provide a depreciation of 10% on this amount. So 10% on this amount comes to 2,248. Then furniture we have to provide on the opening value, that is on 8,500. There is no purchases and there is no sale also, so we will provide at the rate of 10% on this. So the depreciation will be 850. So when we show in our accounts, we will show it in this way. Rent we have already completed. Now depreciation. To depreciation for books 2,248, for furniture 850. So our total depreciation on books and furniture is 3,098. Okay, let us take the other item. We have done all the adjustments. Now the accounts which are left, which does not require adjustments, are wages. We have not taken, so we will take wages. Lighting charges we have not taken, we will take that. Then we'll take office expenses, which we have not taken, we'll take it. Then tournament expenses, which we have not taken, we will take that also. So 4 items are left towards the expenditure side, so we will take those 4 items. When we can see the expenditure side, rent we have taken, then depreciation we have taken, then wages, 2,450, 2 lighting charges 720, 2 office expenses 4,500, 2 tournament expenses 2,020. When we add, after writing all the expenditure accounts and the income accounts, we will check which side is greater, whether the incomes are greater or the expenditures are greater. In this sum, we find after adding subscription, interest on deposits, entrance fees, then donations and proceeds of tournaments, the total comes to 23,200, which is greater than the expenditures, that is including rent, depreciation, wages, lighting charges, office expense and tournament expense. So incomes are greater, so I'm writing the amount 23,200 for the total incomes, the amount which we receive, the amount of the total incomes. If we compare it with the expenditure is short by 8,732, which is our surplus. So I hope you understood how we have solved this question. Now, if you want to show the working note, then this will be your main sum. You will show this as your main sum. And if you want to show the working note, though I have solved the working note separately, individually, but when you do your sum, you can show the working note in this way. At the end of the sum, the main sum, you will show it. Then at the end of the sum, you can show the working note like this. If you think it is necessary to be shown, you can show it in this way. This is the calculation of interest, then the calculation of rent, then the calculation of depreciation. The working note can be shown after the main sum. I hope you're clear with everything. Thank you.